Hi, good afternoon, everybody, and welcome back to Series 6 of the Climate Pioneers Show. This is the last episode of our series, and throughout this series so far, we have been looking at the challenges around scaling deep tech solutions within climate. I've been speaking to investors, founders, venture builders, and ecosystem supporters who are all focused on the same common goal. How do we scale and commercialize groundbreaking deep tech climate innovations? We've looked into lots of the unique challenges that face hardware-based businesses, and we've heard success stories from those who've scaled to Series A and beyond. So if you've missed any of the episodes in this series so far, you can catch up in a number of different places. All the video episodes are over on the Above and Beyond YouTube channel. And if you prefer to listen to it in audio format, you can also find all of our podcast episodes on Apple Podcasts, Acast, and Spotify under the Climate Pioneers Show. But seeing us out for Series 6 is the fantastic Pippa Gawley, founding partner of Zero Carbon Capital. Pippa has over a decade of experience investing into climate solutions, initially as an angel investor before founding Zero Carbon Capital, where she has a specific focus in investing in deep tech climate startups. So thank you so much for joining me in what I understand is a very busy month for the Zero Carbon Capital team.
Yeah, thank you. Thank you so much for inviting me. It's really great to be here. Yeah, you're right. September is kind of back to school. I think not just for the kids, it's for us as well. There's a lot of conferences on in September. So, it feels like everybody really kind of goes out and attends lots of things and sees lots of new companies and has all the catch-up conversations. And then we kind of, focus on getting some deals done in the kind of the few months before Christmas.
Excellent. And I'm fascinated to hear about how you first got into investing, because you started making angel investments into climate back in 2015. So yeah, talk me through how did you get involved, start getting involved in the world of investments?
Yeah, so it's a long story. So essentially I was a scientist by education. I studied engineering a long time ago, and I went into more internet technology and user experience research and design, and got some like general commercial experience, managerial experience. And then, took some time off when our family was young, and which was real privilege to be able to do that. And it was quite an intense few years. And then I got to a point where I felt able to put my head above the parapet again and kind of take on something outside of the kind of domestic world. And I came back to something that's what's always driven me, which is the kind of real desire to make the world a better place and just try and like fix some of the problems that are out there. And this kind of love of science and technology that had kind of driven me to study engineering in the first place. But then I hadn't kind of developed that as a career for a number of different reasons. But it just didn't feel like a great time when I graduated, and the options didn't feel very appealing. And I think mainly it was because I couldn't see that way of combining those two things, like the love of science and technology and the how do I save the world. When I was looking at things like poverty alleviation in Africa, I was like, well, I don't, I did a project when I was a student building appropriate technology water pumps in Zimbabwe, which was amazing. And I set up a charity doing that with some fellow students. And I absolutely loved that, but I ended up getting pretty disheartened actually about what charities can do. And, I think that kind of led into my decision not to kind of go into engineering initially. Anyway, so fast forward to, this was, as you say, 2015. And by then the big problem to focus on is climate change. And that's the one that, when I'm sitting there with two young kids thinking like, what am I going to say to them when they're older? Yeah, I was there and, I knew all about it, but I didn't do anything. Yeah, you're right. So I was like, what can I do about this? And, then, this is a problem that science and technology is uniquely able to contribute to. So I, was casting around for like, how do I combine all of these things? And it took me an embarrassingly long time because we were living in Palo Alto at the time in California, which is kind of ground zero of VC. It's like where all the Sand Hill Road is. It's where all the famous big VCs are. And there's like literally in every coffee shop, like term sheets flying around, So eventually I stumbled across the idea of angel investing and investing for impact specifically. So, I loved this idea and started kind of trying to learn more about it and went on courses, joined groups, joined angel groups. And I worked in particular with this amazing group in Palo Alto called One World, and helped them put on training events and pitch events and find companies that they were investing in from their fund. So all of this kind of helped me to learn a lot more about investing, how to find entrepreneurs, what they needed to be thinking about at that stage, and started making my own investments, and then got a bit more confident and started kind of convincing other angels to make investments that I was making, and this culminated in one particular company which I found very early on, and I was just so incredibly convinced by what they were doing that I kind of went out to every angel I'd met and said, right, this is it. Like, you've got to do this. It's brilliant. And so I think that was, that was kind of part of the journey towards, then you're like, well, obviously the next step is to try and get a fund, like try and get more people to invest alongside you, as it were. So we came back to the UK at that point. So I spent a year, this was just immediately pre-COVID, trying to understand like the UK market, what's going on with climate tech, what is investing like here, and making connections. So this is a bit turning into the long story. I realized that investing is a lot more risk averse in the UK, and there wasn't a lot of deep tech climate going on, especially for the early stage. So I realized, there was definitely a role to play for somebody focused on, like in particular, hard science solutions in the UK, because there wasn't a lot of that funding. A lot of investors who are willing to take that kind of risk, and also that there was a role for that kind of more Californian mindset of like really looking for the big ambitious companies with the kind of visionary founders who really wanted to make a big valuable company and change the world, by solving this huge problem. And I felt sure they existed in the UK. Couldn't really see them at the pitch events that I could find, but I knew they were out there. And so kind of set up the first fund, like making a few leaps of faith that could find those people, that this sort of capital would be valuable, that I could get people to give me money, and that a lot of the rest of the ecosystem, like different funds, accelerators, venture studios, meetups, all those things I'd seen in California, that those would gradually start to happen here.
And what was the state of the ecosystem? Because I set my business up in 2021, so I suppose this was sort of 18 months before that, and a lot has happened and evolved and changed even since we started operating. What was the state of climate tech, the climate tech ecosystem, and in the investment landscape at that time here?
Yeah, so the investment landscape was quite dominated by, I think, historic thinking in the UK, which was really around thinking about the climate space, which we now call climate tech and the climate space. Then it was much more about, more general environmental work. So in particular, like energy efficiency. So, there were a lot of, at the time, and there still is, the UK was very, very strong in software. So, there's a lot of fintech going on, a lot of SaaS, and that's what the VCs were focused on. And now that's shifted a bit more to AI, right? But there's still a huge focus on like digital tech solutions in the UK. And then, so a lot of the things you saw at the pitch events back in 2019 were things like slightly more energy efficient ways of doing what we're doing already, which was like 10% more efficient boilers, and you're like, well, that's not going to fix climate change. It's great, good, but not enough, and apps to track your digital carbon footprint and stuff like that. So it didn't feel like anything that was like hugely impactful. And a lot of that I think is because of the focus of the UK on EIS eligibility, which I think can push people towards more risk-averse solutions, exits, in the 3 to 5 year old time frame, and the more kind of digital type tech feels safer there. Yeah. And also, the strengths that we have in the VC market at that time. So, I think that, I think a lot of things changed since then, right? So obviously COVID, and 2019, I think, was a real landmark year in terms of it was the year when people really started to talk about zero emissions, and the UK government, gradually put that in place as well. Like, when you're talking about reducing emissions, it's easy to think that energy efficiency is the way to go. But when you're talking about zero or net zero, you realize actually, no, we've got to do things differently. We've got to really imagine the way we do everything in a different way. So I think, the world kind of really started to get behind that, and it was the kind of, you know, the Greta Thunberg and the, you know, the changes to the financial markets and regulation, you know, shareholder action, political action, all of these things were, all these massive forces were starting to kind of, you know, push everybody towards, you know, what seemed, you know, super self-evident to people like me and all the people looking around climate tech, was that, you know, we have to have new technologies, we have to have, you know, we have to move as quickly as we can towards, you know, zero, you know, and just a bit better is not going to be enough.
Yeah. And tell me about you, because you mentioned there about bringing some of that Californian energy and mindset, right? And trying to find founders visionary and going after these moonshots and having big ambition. I mean, I often hear the fact that there's this discrepancy between the US attitude and the UK attitude in terms of founder confidence, founder ambition. Do you still find that to an extent? And how have you managed to find those visionary founders that you were looking for?
Yeah, and it's, you know, it's really interesting. So yeah, definitely there's still a gap. You know, you talk the American founders. I think, you know, VC is a much more sophisticated game in the US. There's so many more investors. There's so much more capital. There's so many more entrepreneurs. But it's more about the fundamental risk appetite. You know, the belief there is, you know, a startup is an experiment to see if there's a company. And it's okay to fail. In fact, like you're nobody unless you've already done it once and failed, right? So I think there's much more of an embrace of failure, and you know, I think that's a healthy thing. You know, our kids at school get taught a lot about growth mindset, and part of that is embracing that, you know, it doesn't always work out, and that's okay. You learn from it and you move on. And so, you know, I think it's healthy to have that perspective, but you do kind of need to hold both things in your head at once. That you've got this entrepreneur in front of you saying they're going to solve the world's problems and build a unicorn, and of course, not all of them are going to work out. So, you know, who do you believe? You know, which is authentic? And I think that's part of the issue translating it to the UK, because people get told, you know, you need to sound really confident. And talk about the hockey stick and unicorns, and that doesn't come as naturally, I think, to the British psyche on the whole. And it has to come from a place of authenticity, that you really believe in what you're doing, and that you can make a valuable company, which of course you can if you're solving a big problem. So, you know, I think it's important to show that confidence and ambition. But also to have the realism. And I think, you know, holding those two things in your head can sometimes be a little bit difficult.
Yeah, absolutely. And tell us about your focus as a fund then. What do you invest in? Share that with us. And has the thesis evolved or changed over the last 4 years now, 4.5 years?
So I have my angel portfolio in the US, then Fund 1 and Fund 2 in the UK. And they all have really the same investment thesis, which is around supporting early stage companies, so seed and pre-seed companies, backing scientific founders who are developing hard tech solutions that have big potential climate impact. So we look at emissions reduction potential of 0.5 gigaton a year. And there's a lot of words there. I'm happy to dig into any of those in more detail. But essentially, like I said, looking for scientific innovations that are solving the big problems of climate. What's changed is our geographic focus. The first one US, second one UK only, and the third one now we're investing across Europe. Okay. Also, our kind of scales changed. We've now got a team of 5, including Max in Germany, and you know, we're investing more money. So we've now got a fund of 20 million. So yeah, we can do more in the way of follow-on capital. We can lead bigger rounds, but we want to keep our focus on the very early stage, because we know that's kind of the hardest one, where the capital is most needed. And we think there's the biggest potential for both financial returns and impact by focusing on that stage.
And to that point, you mentioned there about the impact assessment and that 0.5 gigaton per year reduction potential. How do you quantify that? I guess that can be really difficult when there's still quite a lot unknown when it comes to the actual technology solution. How do you quantify that to know? And is that something that you expect founders that are raising, when they start their conversations with you, to already have some really good calculations behind, or do you work with them to figure that out?
Yeah, that's a great question. So we always calculate the emissions reduction potential, so that we kind of are doing it in a reasonably consistent way. And we have an amazing woman on our team called Chloe, who you should also meet. She's brilliant. She heads up our research and analysis work at Zero Carbon. So that's one of the things that she does, is calculates this emissions reduction potential. For the first fund, I didn't have Chloe, so I was relying a little bit more upon kind of the wisdom of the crowd. One of the funds I worked with a lot in the US, it's called the Prime Coalition. They now have a fund called Azola, and they were kind of pivotal in developing this tool called the CRANE tool, which stood for something like carbon reduction analysis of new. Anyway, well, it stood for something clever. It basically had a ton of templates in there for all of the big emissions areas and how they could be decarbonised, and would calculate their emissions reduction potential over time. So if you, for example, replaced fossil aviation fuel with biofuel, what that would look like. And so they'd put work into the templates there with lots of data that was reliable and kind of peer reviewed. And then you can go in there and tweak things like how quickly you think it's going to be adopted, or the carbon intensity of the particular solution you're looking at. So I used that tool heavily for the first fund. Now we have Chloe, so we can be a little bit more sophisticated. We often start with CRANE. But what we're really looking at is, it's kind of like the carbon TAM. We're looking at what is the size and shape of the problem now. And then this specific technology that we're looking at, which bits of that do we think they can address in a way that they're going to be the most competitive solution there. So they're going to be the cheapest or the best, or the most favoured by regulation, whatever it might be, that will give them that competitive edge. Of course, we know that not all of our companies are going to be the ones that succeed and take all of that emissions reduction potential. But when we invest, that's the best we can do for that stage of company, is to say, right, this is the size of the problem. Let's say, take aviation, like all of aviation, and we think that our company will be the cheapest of this kind of fuel, and therefore they can take maybe a third of that, maybe a half of that. We'll make some kind of estimate there, and then we're saying, right, so yes, that does meet our 0.5 gigaton a year emissions reduction potential. And then over time we keep reviewing with the company which parts of those assumptions we think are still reasonable. Like, has the market changed? Are there other technologies that have come in that are better? And that will are the team executing the way that we need them to be on track for that technology to succeed, and that will all work into our decision as to whether we make follow-on investments in that company.
Okay, and is there a time scale that you run that over, or within which you expect them to have that reduction?
Yeah,
because immediate of impact's important, right?
Yeah, of course. So we are focused more on longer term impact. So there's lots of funds that are focused on the kind of the low hanging fruit, things that we can commercialize quickly, and that's great. Of course, we need those. We should just get on and do them now, right? So we're focused on, let's say in the next 10 years, we're going to do everything we can to implement all of the technologies we've already got. That's great. That would halve emissions. Then we know we need new technologies to then halve emissions again, because we don't have solutions for fertilizer, aviation fuel. We have a lot of nascent technologies, but we don't have anything at scale yet. So that's what we're trying to work on. And then there's even like halving it the following 10 years after that, like the 2040s. So even further out, right, we know we're going to still have hard to abate emissions there. What are we going to be looking at? And there's a lot of people who've done work to try and figure out what are going to be the hardest problems to solve, and what will be the biggest sources of emissions at that stage, given if we've managed to decarbonize all of the kind of easier stuff. So, will it be looking more at like refrigerants at that point, or carbon capture, or, so like really taking a longer term view on when these technologies might actually scale, but knowing that we need to have technologies there that will solve those problems.
Yeah, that's fascinating. And you've got 16 companies in the portfolio at the moment, right? Or is it 17 now?
Yeah, 18. Yeah.
18. Oh, there we go. Because I saw a new one this week, Exegene.
Yeah, and there's a couple which we haven't announced yet for various reasons as well. So yeah.
So from the portfolio, can you tell us about any of the common threads that you see that run across those companies that A, made them investable in the first place, and B, have made them successful?
Yeah, that's a great question. So, when we're looking at a company, we always look for, like everybody else, we look for team and technology, right? So, assuming they've passed our kind of carbon TAM threshold, we're looking for 2 founders, ideally, because this is hard, and you need a partner. And we also think, like, if it's a good idea, you should have managed to convince one other person to join you. So it's a kind of like first sales test, ideally 2 founders. And we want them to be like mission aligned with us, because then we know if they're doing it because they want to fix climate change, when they pivot their company, which inevitably they will, we'll still be happy with where they're going, right? Because they're only doing it to have this impact. We're really focused on that, and that's an interesting one as well, because in the UK in particular, I think there's a lot of academics who have a great idea, and then they kind of want that technology to get out in the world, and it happens that it applies to something to do with climate tech. But actually what they really want is for their technology to be out in the world, and that might mean that they're much more likely to go down a route that we're not so comfortable with.
Okay.
We look for that mission alignment, so we don't get drift in what the company's doing, but also because they're going to need to really want to do this and like believe in it on kind of a visceral level to get through the next 10 years of scaling that company, because it's really hard being an entrepreneur, right? It's hard work. So and they're going to have to be very resilient and deal with all kinds of problems and grow with the company in ways they can't even imagine yet. So they're going to need a lot of passion and enthusiasm to keep going. We're looking for them to be able to explain their idea clearly. Again, we often tell our entrepreneurs that their job now is to be like science educators, right? They've got to convince customers, they've got to convince investors and employees, they've got to be able to explain what they're doing in really clear and accessible terms, and inspire people with that vision. Those are some of the things that we look for in founders. We look for people that we want to work with, which is quite subjective, but again, ultimately we usually take a board seat. We're going to be spending a lot of time with these people. It's important that we get on well with them, we trust them, they trust us. And it's very much a two-way choice thing. So obviously the high quality companies, they might have other choices with whose money they're taking. So we need to make sure that they want to work with us as much as we want to work with them.
Yeah, absolutely. And on that team piece, I imagine at that very early stage at pre-seed, the team isn't a fully formed thing yet, right? Especially at that founding team level. If there are gaps in it and you can see that the carbon reduction potential is there, they are really mission aligned, but perhaps not all of the skill set is in that founding team. Perhaps the people in that team aren't great communicators or educators, and they need to bring somebody in that's more commercial that can do that. Is that something you support them with, or is that something you would support directly with from a board perspective?
Yeah, right. So we don't have bandwidth to really take operational roles in the company. So our role is much more on the governance side. So supporting, mentoring, coaching. Yes, but taking on a CFO role or a CEO role, no, we can't do that. So yes, we would support somebody with hiring. We might say, like, we're interested in investing, but we need you to fill out this piece. And that might be a condition of investment, or like something we want them to achieve within 6 months of investment, say. We do support that. We're really looking for like the capacity to learn, and we might kind of take that from maybe some of the things they've done in the past, but also like how they react to feedback as we go through the due diligence process. Like if they're really resistant to feedback, that doesn't bode well. But if we think they've got the capacity to learn and the willingness to learn, then that's a really good sign, because it might be that they can train themselves how to do communication better. Lots of people, when you look at CEOs who, when you look at how they've changed over time, some of the kind of famous examples of how they could barely string a sentence together at the beginning, and now they're giving these polished kind of orations in great big stadiums. So it's definitely a skill that you can learn, right? That kind of communication, to take that as an example. So so we will definitely work with the founding team and try and identify gaps that we think they're going to need, and support them to fill them.
Yeah, absolutely. And from in terms of the challenges that you see these companies face, I mean, one of the resounding things I've heard time and again throughout recording this series is hardware is hard, right? And there are a series of unique challenges that hardware businesses face that software businesses just don't. It's far more risky, it's more capital intensive, it's long time to market. What are the sort of key challenges and blockers are you seeing that these companies face time and again?
Yeah, so you've probably talked to your founders about a lot of this, but typically it takes longer to get to market, it takes longer to scale because you're making a physical thing. So you can't just push a new version of the software to the servers and off you go. It's like you've got to start again, you've got to retool, you've got to it's iterating and developing the product is harder. You're probably going to need more physical space. So, that comes with constraints as well. That needs more money. All of this takes time and money. Supply chain issues have become particularly difficult over the last 5 years as well. COVID and Ukraine, that's made everything a lot more complex. The IP might be harder. Well, that's one of the advantages of hard tech is you're more likely to be able to have IP over software. But again, you're going to have difficulties there. You've got to work out what your strategy is and how to file it and how to protect it and keep it maintained. Hiring the right skill set might be difficult. So finding the right team. Several of our companies have had to relocate because they couldn't find enough people as they grew locally to keep up with their demands. So I think all of these things are quite difficult. I think there are also some advantages, and when you look at the analysis, overall, the companies that are successful, they can be way more successful because they have something that's more defendable. And in our case, we're looking for companies that are solving these big problems. So we're not denying that software has a role in climate, but it's a limited one, right? So we know that we need physical solutions to deal with this physical problem. So at the end of the day, we know that these companies are going to be more valuable and more successful than the software counterparts in this particular sector. And that's what one of the...
when it comes to a retention and longevity perspective, right? Because a software solution can easily, with time, be usurped by something else, and it's quite easy to swap them out. They get more churn, right? Whereas if you've embedded something physical, it is much harder to swap that out.
Yeah, that's true as well. I think it's really just the nature of the problem. It's like, sure, there are some exceptions, like carbon market software. Like, sure, we're going to need some market software, but that's because that's it, right? And and all of the sensing and monitoring and data, and there's a lot of value that can be added there. But I think we need to be honest with ourselves about really how much value it's unlocking. I think in the best case, it's bringing visibility and money to the problem. But again, we need to have the technology there to solve the problem.
Yeah, and how are you seeing the path for startups beyond seed? So the follow-on stage from where you are now, and as they get to Series A and beyond, and they're starting to go from that kind of pilot stage into commercial scale-up. Do you feel that the infrastructure around that to get them there is getting there, is better? Or it sounds like from a lot of the conversations I've been hearing recently, we've still got a very long way to go there. How are you seeing that onward journey?
Yeah, I mean, it's particularly brutal. Like the last 2 years, I think have been. I mean, there's no two ways about it. It's been awful for fundraising. We fundraised ourselves. It was awful. But we love all of our LPs, if they're listening here. They're all great. So, but it was really tough, and I think all of our companies that have been fundraising, all of them have had a difficult time. Some of them have made it look easy. And, everybody, when you see the LinkedIn announcements, it looks effortless, right? But the reality is it is tough. There's, again, you look at the numbers at a market level, it's there's less money, there's fewer deals. Everybody's become a lot more risk averse, and so that is hard. On the flip side, I think it's important to remember that there's always been a valley of death at Series A, and there's a reason for that. It's because not every company can succeed. Remember, like all the startups are experiments to see if there's a company there, and that's the point at which the kind of the rubber hits the road. Is at Series A, if you can't get customers to buy your thing, you don't have a company, right? And there's no two ways about it. That's the definition of a company. So and that's, you can believe up to that point at pre-seed, seed, you can believe there's going to be a market without too much evidence. But you have to show it for Series A. And so, a lot of companies are going to fail at that hurdle. And that's always been the case. So I think it's particularly hard at the moment. And that's why, I think it's I think it's great that we have a new government that's clearly doing a lot more to support clean tech already. It would be even better if we had something along the lines of, the IRA, like they have in the US, relatively recent change, but it's made a huge difference to companies to be able to show that they have a business model. For companies like hydrogen production or CDR, carbon dioxide removal, just knowing that you've got somebody who's going to pay for what you're doing is transformative and really helps companies through that stage.
To that point, is there more that you think corporates could and should be doing about, first of all, engaging more at early stage and, starting to look at more innovative ways of making these agreements and sort of agreements and, advanced market commitments to these companies that evidence that traction, that help these companies get through to Series A and B?
Yeah, exactly. So I actually think that Series A is the right time for the corporates to get involved. I think some do get involved earlier, and it can often be difficult actually for the company especially in terms of taking investment. Because if you start working with this company, does that company then not want to be your customer?
Right.
What is it signaling? Are they helpful? And corporates can be, very slow to make decisions, but they do have amazing resources, not just money, but people and pilot facilities, land. So they can be incredibly helpful in improving that customer demand by being the first customer and by being supportive of things like pilots. So, if they can, give letters of intent and then kind of gradually firm those up to memorandums of understanding and then to actual cold hard contracts for offtakes, which can be conditional upon meeting quality criteria or whatever, that's hugely helpful for those companies to then secure that Series A funding because they can show that they have that demand, that they have those customers lined up.
And what do you think is prohibiting as many of them doing it as they could be and as they should be at this stage?
Yeah, so I think for a lot of companies, it's difficult to engage with startups. It's difficult to necessarily find them. So, again, a lot of companies, bigger corporates run like accelerator programs or like pitch events, which are really to try and help them find, surface some of those opportunities that might be, strategically interesting for them. And I think companies, again, they have to deal with their own internal structures. So it might be that there's not a very kind of risk-taking culture within a lot of the big companies. So, I think that's all gradually changing. I think a lot of corporates that are relevant in this space are, coming round to the most constructive ways to support startups. Because really, it's in their interest. If without that innovation, they know that they're not going to succeed in the long run. So there is a nice symbiosis there as well. And I think that's when it works best, is when the corporate really values what they're getting out of the startup and, is in it for the long term. So, that's where we see that kind of partnership being the most successful. Yeah, why are they not getting more involved? I think, unfortunately, a lot of corporates are, being a bit slow to act, and they're not really acting until they're really forced to by regulation or shareholders. And, conversely, a lot of startups are wary of working with certain corporates, particularly in the energy space, because they're oil and gas companies. They're the ones who arguably have created the problem. So, it's difficult to, there's a fundamental layer of trust that is difficult to kind of repair there.
Yeah. And I wonder if there is, and this isn't necessarily a bad thing, but I suppose more focus, is their thinking still focused on how they can reduce their own impact, and sustainability and ESG being an internal problem rather than something that they need to drive externally and fund innovation in? I don't know.
Yeah, I think that's an interesting way of looking at it, because I think you're right. I think a lot of companies will be looking at that, like what we call the scope 1, 2, and 3 emissions. So things they're kind of directly responsible for, whether it's like where they buy their electricity or how their employees get to work. And I think that's always been under the bucket of a kind of almost like nice to have kind of, corporate sustainability efforts, which of course is necessary and we have to do, but perhaps isn't as big an impact as their scope 4 emissions. So like, what are they actually producing? So when you say, I'm flying to a conference on Monday, and I know when you go through the airport, they proudly proclaim that Heathrow as a carbon neutral airport, and you're like, really? You know, really? So, and that's what you get. You know, I think when companies are very focused on, you know, that scope 1, 2, and 3, and really not doing enough about their bigger impact that they are part of. You know, so I think that's you know, again, I think that's changing, and I think that there's been a shift from this being a kind of nice to have to you know, well, this is existential for the company, and it's not just something they have to do for the regulation. It's like, if they don't do this, they're not going to exist in 20 years time. So you know, I think there is, you know, some faster than others. You know, there are oil companies out there who've completely written down their assets. They're still producing oil, but they know that the future isn't there, and all of their new investment is going into renewables. You know, like Repsol, for example, but there's not many of them, and you know, I think over time there will be more and more people taking that kind of movement, and it's being forced as well by a lot of the things like lawsuits that we see people bringing against those companies, that is kind of forcing them to take responsibility for what they're doing.
Yeah, I think that point you just made about, you know, when they see the innovation as almost being an existential threat to the business. I think that I used to recruit before I moved into climate. I did a lot of recruitment in the fintech sector, just around the time of open banking and the kind of revolution really that happened in the fintech sector around that time. And it was really interesting to see all of the big incumbent banks and big finance providers start to suddenly see this as an existential threat. And actually what they started doing was just, if you can't beat them, join them, and buying them all up.
Yeah, exactly. So buying them up, all like the big banks all doing their kind of own kind of thing that looks like a neobank, but actually is still, you know, that West underneath, you know. So,
so maybe, yeah, you're right. I think it's, yeah, when it becomes existential for them, that tends to be when they act. And what sort of technologies and solutions within the world of climate and deep tech are most exciting to you at the moment? Where do you think the biggest potential, untapped potential is for us?
Yeah, that's a good question. So, you know, there's a lot that we're still excited about, because there's a lot that still hasn't been solved. So you know, like low cost carbon dioxide removal is one of those that well, we have an announcement coming out next week about a company that we've just invested in that's really exciting. But it's definitely still a space that we need a lot more focus on. I wish it wasn't necessary. Everybody, you know, I wish we were just doing this by decarbonising, but we've left it way too late. So we have to look at that for a decent amount of the emissions reduction that we're doing. So yeah, trying to find that kind of low cost and high quality carbon removal is I think still quite a hot area to look at. We're quite excited about geologic hydrogen at the moment. So, you know, hydrogen has been a bit of a kind of buzzy fad space for the last few years. I think a lot of governments and oil and gas companies were really hoping that would be the answer, but we always really struggled with it. So it's like, well, if it's going to take more energy to make this hydrogen than we get out of it when we burn it, then what's the point? You know, this isn't like the most efficient way of doing it. And you know, there's always going to be places where we actually need hydrogen, like, you know, green steel production, or potentially, you know, aviation, you know, so, or some industrial applications. But I think, you know, the idea of geologic hydrogen is really that if we can get hydrogen that cheap, actually that is a total game changer. Like, we can all just, you know, give up and go home. You know, it really is something that could save the world, right? So so we are looking at a few companies in that space, and you know, I think that that's an incredibly exciting area. There's lots of risks. Hydrogen itself is a greenhouse gas, and it's highly explosive, but you know, so is methane and jet fuel. So you know, we're trying to look at what are the risks and what are the potential benefits of those kind of really big solutions. What else are we excited about? Geothermal, we think still has huge potential, and I think there's quite a few nice innovations in that space that might open that up more as a source. So, you know, new sources of renewables. You know, so I think there's still quite a few sources for baseload or dispatchable low carbon energy sources, which I think I'd put geologic hydrogen into as well. That, you know, would make a huge difference.
Perfect. And if somebody listening is one of those visionary founders with an incredible moonshot idea, ideally in one of those areas you just said you're very excited about, what's the best way for them to make contact with Zero Carbon Capital?
Yeah, just get in touch directly. We're all on LinkedIn, pretty easy to contact. We've also got entrepreneurs page on our website where anybody can upload a pitch deck and have it considered. It's got our investment criteria spelled out there. And then we will have a look at that and come back to you as quickly as we can as well.
Super. That's lovely. Well, Pippa, thank you so much for your time. It's been lovely to speak to you. And thank you to everybody who's been listening. That is a wrap on Series 6 of the Climate Pioneers Show. Can't quite believe it's gone by so fast. We will be back with Series 7 in a couple of months' time. So look out for that. If you're listening to us in podcast format, do subscribe to the Climate Pioneers Show to be notified when Series 7 hits in, I think, end of October, hopefully. So keep your eyes peeled. In Series 7, we will be focused on the challenges of building teams and scaling businesses.